where we are, quick overview on economic aid funding options. We'll do a deep dive into the updates to the PPP program as they pertain to Schedule C filers. And then we will open it up for Q&A. If we have time, we originally thought we would talk about more traditional SBA financing option for small businesses. We had some important updates to the PPP that I think definitely warrant more time to talk about now, given that the PPP is going to be expiring March 31st. So we want to give people ample amount of time to ask questions about these new updates so that you're informed and ready to apply for the PPP if it makes sense for your business situation. All right. Quick overview, 3 loan programs, the PPP, which we'll talk about at length today, debt relief on existing 7A 504 or microloans. So if you currently have a 7A 504, SBA 7A 504 or microloan, then you most likely have already received a letter from your lender stating that some portion of your payments will be covered by the SBA. The economic injury disaster loan, that is a working capital loan that is set to expire at the end of this year, December 31st, 2021. The loan is designed to provide working capital and economic relief to businesses currently experiencing temporary loss of revenue due to COVID-19. The targeted EIDL advance is new. It is a grant, and it really only applies to 2 categories of people. So individuals who did not receive the full 10,000 advance when they applied for the EIDL advance or EIDL loan, and for individuals who applied for the EIDL advance but did not receive any of it because the funding ran out. There's nothing that you can do proactively as a business to apply for the targeted EIDL advance until you receive an email invitation from the SBA Office of Disaster Assistance, basically stating that you're potentially eligible for the targeted EIDL advance. Here are the steps that you need to take to apply. So it's an invite only type of program. We covered it at detail at length last week. So if there are still some outstanding questions about the program, please drop those questions into the chat box, and then we can circle back during the Q&A portion of this presentation. So, and finally, the Shuttered Venue Operators Grant. This program is still not open for application, but the grant is designed for live venue operators or promoters, theatrical producers, live performing art organization operators, museum operators, motion picture theater operators, and all of the qualifications, all of the eligibility is outlined in great detail on SBA.gov. So if it's something that you are considering, or if you fit into one of the categories or business groups that I mentioned, then I certainly encourage that you go on to SBA.gov and review the eligibility requirements in detail. Like I said, the application, this program is going to be administered by the Office of Disaster Assistance, so the same group that's administrating the EIDL loan. However, it is not accepting applications at this time, and we have not received any guidance on when they will open the SVOG other than soon. So to quickly recap the PPP program, there's a first draw and a second draw. So most businesses are eligible for the PPP. With the first round of funding, sole proprietor, independent contractors, self-employed individuals, partnership corporations, LLC, 501c3, 501c19, and tribal businesses were all eligible. This go around, some newly eligible organizations qualify. So housing cooperatives, destination marketing organizations, certain 501c6 organizations like Chamber of Commerce, and eligible news organizations. So that's PPP first draw. Second draw. In order to receive a second draw PPP loan, you have to have had received a first draw. So you can't apply for the second draw unless you've received a first draw. And you have to use down the funds of the first draw loan in order to be eligible for the second draw loan. You have to have no more than 300 employees. And the most important qualifier for the second draw PPP loan is you have to demonstrate at least a 25% reduction in gross receipts between comparable quarters in 2019 and 2020. And I'll stress that these need to be comparable. So you'll take Q1 2019 versus Q1 2020. You can't cherry pick. You can't pick Q1 2019, Q3 2020. They have to be comparable. So eligible expenses for the PPP loan, and I'll backtrack. This is a loan, but it was designed so that it can be completely forgiven, meaning it's effectively going to be a grant for your business. In order for you to obtain forgiveness, you need to first apply with your PPP lender for forgiveness, but B, you need to use, and more importantly, you need to use the PPP loan on eligible expenses, which include payroll costs, rent, mortgage interest, utilities, operation expenditures, certain property damage costs, supplier costs, and worker protection expenditures. The breakdown has to be 60-40. So at least 60% of your PPP loan needs to be used on payroll. 40% can be used on the other eligible expenses. Now you don't need to use only, so you can use 100% of the loan on your payroll and payroll cost, but at least 60% needs to be used on payroll in order for the loan to be forgiven. And there's another nuance that I'll talk about for forgiveness a little later in the presentation. All right, getting into the new changes that came in for the PPP. So the exclusivity period I talked about last week, today is the last day of that exclusivity period. So for 14 days, the SBA was only accepting applications from borrowers that had fewer than 20 employees. And that was designed so that the smallest of the small businesses had access to the PPP loan. Now, this by no means disqualifies everybody else from the PPP program. The only, I guess, issue, or maybe not issue, but the only thing that effectively happened is that anyone who applied for the PPP that had more than 20 employees, their applications were put on hold until this exclusivity period ends. And after today, the lenders will start submitting PPP applications for businesses that have 20 or more employees, and for everybody else as well. So basically, after today, the PPP program is open to everybody again. Schedule C filers. So this is where some of the most important changes have happened. And I'll say right off the bat, a little bit of a bummer, but these revisions are not retroactive. So if you're a Schedule C filer, you already applied for a PPP loan using the original calculation using net profit, you cannot reapply or ask for an increase to your PPP loan. Now, there are a few exceptions to that rule, and your lender is now very intimately aware of these exceptions, so they should be able to guide you through it. But if you are a Schedule C filer, you applied for a PPP loan, submitted an application using the original application form, if the loan has not been approved, you can withdraw the application from the payment protection program platform. That's something that your lender you will just instruct your lender to withdraw the application, and then you will need to reapply to the PPP. If the application has been approved and the loan has not been dispersed, the lender can cancel that loan on their end. But if And finally, if the loan has been dispersed, you've received the funds, but the lender hasn't filed something called a Form 1502. Basically, they haven't reported the disbursement to the SBA. Then the lender can cancel that loan as long as you repay, give them that money back and reapply for the PPP using the new calculation. And I'll get into the new calculation in just a moment. But I wanted to mention that up front because for obvious reasons, it's disappointing for a number of businesses who have already applied for the PPP. There are some steps that your lender can take, but it's limited to 3 situations. All right, so another question that we hear a lot is, are partnerships and LLCs included in the revision for Schedule C filers? Partners and partnerships are not included in the revisions. Single member LLCs that file a Schedule C are included. Qualified joint ventures, as defined by the IRS, are also included. So that the qualified joint venture is effectively for married couples. So if you are the only members of the joint venture are a married couple who file a joint return, both spouses materially participate in the business, and both spouses elect not to be treated as a partnership. And there are a couple of other limitations that you can find on the IRS website. Also, the new application, the Form 2483C for first draw PPP, and the Form 2483 SDC, second draw, they outline in the instructions on how you should fill out the application if you are a qualified joint venture. The instructions on these forms are much better this time around. So if you go onto the SBA.gov website, you can download the instructions to review the application. It's going to be very quick, but something that I will note again, you need to apply for the PPP with a PPP lender. So we've had situations where people send their PPP application to the SBA office, and that's not going to get you anything. You need to apply with a PPP lender. The PPP lender, most of them have automated application forms that walk you through the application process. It's very painless, dare I say easy, maybe not so easy, but much easier than it was in the previous round. So I would definitely stress that if you are considering a PPP, if you haven't received a first draw PPP loan, then you have to first identify a PPP lender and then work with them to apply for your first draw PPP loan. Same applies for PPP second draw loan. But for those of you who are applying for a second draw, you know by now that you need to apply with a PPP lender. So more flexibility for Schedule C filers. Income now encompasses borrowers' net income and gross income to account for fixed and other business expenses. I mentioned the application forms, those are available online. Unless you want to look at them before you approach a lender, you really don't need to know these forms because, like I said, all the lenders, most of them have automated application forms on their website that you would use to apply for the PPP. So the clarification on reporting number of employees, that was a little ambiguous in the previous applications, and it actually came up last week. Somebody asked, I'm a sole proprietor, do owner employees, as an owner, do I count myself as an employee? And that answer is unambiguously yes. So even if you are one, you count yourself as one, and that's very clear on the application form. Now, if you have employees, then they also outline average employment over the time period used to calculate aggregate payroll costs, or average number of employees per period, per pay period in the 12 completed calendar months prior to the date of the loan application. They also made a clarification for anyone who fits under the NAICS Code 72, so food, effectively the food industry. You can now, there was confusion about, is it just per location or is it aggregate? That's also been clarified. Again, if you don't fit into that category, pay no mind. If you do, then the instructions are detailed in the application as to how you should fill out the number of employees. All right, so what's the big change? You Schedule C filers that have no employees can elect to use either their gross income, line 7, or their net profit, line 31. So for most businesses, line 7 is going to be much higher than line 31. So your gross income is generally going to be much higher than your net profit, which means that your loan amount will also be higher. The calculation for Schedule C filers with employees, you can also elect to use either net profit or gross income. So I want to point out, because this wasn't entirely obvious to me up front, you can still elect to use net profit, but you now have the option to use gross income. I mean, for most businesses, I think everybody would want to use gross income, but there are reasons why net profit might be a little safer for the business. And I'll get into that a little bit later. So for employees, you can also, for Schedule C filers with employees, you can also use either net profit or gross income, but then you would subtract your payroll costs. So line 14, 19, 26 from your Schedule C. Owner compensation does not include employee payroll costs. So that's why, excuse me, you would subtract 14, 19, and 26 from gross income to determine your owner compensation. And then you would have to add owner compensation and employee payroll costs, but the employee payroll costs have to come from IRS Form 941, and that would equal your total payroll cost. This is for Schedule C filers with employees. It's a little confusing, but like I said, if you apply with a PPP lender, they will walk you through this process. So this is the calculation. I don't want to spend too much time on this, again, because this is going to be an automated process with your online application. Just note that, again, you can either elect to use net profit or gross income to apply to determine your loan amount. And so you would take that amount, you would divide it by 12 and then multiply it by 2.5. And the amount cannot exceed $20,833. So you'll also notice on the application, if you download the application, they'll ask to add any outstanding amount of economic injury disaster loan. That's optional, and it applies to a very small subset of people. So if you received an EIDL loan before April 2020, then that could apply to you. But for most people, that's not applicable. So you just ignore the EIDL loan amount and move forward with the calculation. So also, this is a revised formula for Schedule C filers with employees. It's very cleanly laid out in the actual application. It's more straightforward than going through these steps verbally. So for those of you who want to see this calculation in action, you can download the SBA form, application form, and work through the application. It's very quick, and the instructions are much better this time around. But like I said, it's going to be automated for the majority of lenders. And I would just encourage that you trust their process, and it's going to be much more straightforward, like I said, than the previous round of PPP. So these same rules apply for loan amount calculations to the first draw as well as the second draw, there is a difference with the second draw PPP loans for Schedule C filers who elect to use the gross income for their loan calculation. The loan amount cannot exceed 2 million. And then borrowers with NAICS code beginning with 72, they can multiply their average monthly payroll by 3.5. Let's see. So this is another important point. The SBA review of good faith loan necessity certification. So the SBA is going to assume that you're applying for the PPP because you need these funds. And there's an automatic safe harbor that applies to businesses that apply for a loan up to $150,000. Now, for Schedule C filers who are using gross income and your reported income is more than $150,000, that's just going to flag the SBA to look at your application in some more detail because they're going to want to verify that you, in fact, need this money and not trying to play the system effectively. So that's the only word of caution. It doesn't necessarily mean you won't be qualified for the PPP loan, but it will raise a red flag so that your application will be reviewed in more detail to ensure that we are preventing as much fraud from happening as possible. Because like I mentioned last week, unfortunately, that was an issue in the first round of PPP and EIDL. So I mentioned PPP forgiveness, and I want to call out this clause that's published in the interim final rule. So in the official guidance that was put out by the SBA. Forgiveness amounts are limited to either A, the prorated portion of 2019 or 2020 net profit or gross income for a covered period up to 2.5 months, or B, 2.5 months worth of 2019, 2020 net profit or gross income for a covered period greater than 2.5 months. Now, I didn't address the covered period. When you apply for a PPP, you can elect a cover period anytime from 8 to 24 weeks. So 8 to 24, anything in between. What this statement says is if you apply for forgiveness using a cover period that's less than 2.5 months, then they're going to calculate the max forgiveness amount using the prorated portion of your 2019-2020 net profit or gross income. In a lot of situations, that's going to be less than the PPP loan amount that you requested and that you received. And so I just want to flag this for businesses. The moral of the story is when you're selecting a cover period, your safest option is going to be to select a cover period that's more than 2.5 months. So that's more than 10 weeks. Anything less than that, you run the risk of not getting your PPP loan forgiven completely. And I just provided an example to demonstrate this point. So I calculated the loan amount using both the net profit and the gross income. And you see that using gross income, the loan amount is a little bit higher. But in either one of those situations, if you're using an 8-week cover period, then the max amount of forgiveness, that's going to be so for net profit, it's going to be line 31 times 8 divided by 52, because it's 8 out of 52 weeks. And that amounts to 4,367, whereas your loan amount was 5,913. So you see that loan amount won't be eligible for full forgiveness if this borrower elects to use the 8-week cover period. And the safest way to avoid all of this is, like I said, to select a cover period that's more than 10 weeks. eligibility revisions to the PPP program. So SBA eliminated restrictions on businesses with owners who have prior non-financial fraud felony convictions. So if you had prior felony convictions, then you could still apply for the PPP as long as those were not fraud related felony convictions. This elimination of the restriction is not retroactive. So this means that if a borrower, and this happened, unfortunately, not fairly often, well, not too often, but it happened enough that this clause needed to be added to the IFR. So it means that if a borrower falsified their certification on their first draw PPP loan, so if they claimed that they didn't have a felony charge, but then SBA went in, checked, and they found that no, in fact, this borrower did have a felony charge and denied the application, then that borrower cannot now go back and say that, well, yeah, I had that felony charge, but now I want to apply for the PPP because the rules have changed. That won't work for those individuals. You can't do that. It's not retroactive. So remaining in place are restrictions on businesses with 20% or more owner who has an arrest or conviction for felony fraud related to financial assistance fraud within the past 5 years and is currently incarcerated for a felony at the time of the application. Elimination of restrictions, student loan debt delinquency and default. So if you had a student loan delinquency or default, you would not be eligible to apply for the PPP. They have eliminated that restriction. So if you do have delinquent or default student loans that have defaulted, you can apply for the PPP. And this is the only restriction that is it's a retroactive change. So if you applied and you were denied because of the student loan debt, you can go in and apply, and if everything else checks out, then you can still secure a PPP loan. So again, I want to highlight the question about non-citizen owners that came up in the previous presentation. And I will reiterate that non-citizen business owners that have an IT number are eligible and can apply for the PPP loan, presuming that you meet the other eligibility requirements. So this covers a whole, FAQs, information on PPP, the official IFR, the official guidance that SBA published on the new loan calculations and eligibility, and then all the different applications. Again, unless you want to review this ahead of approaching a PPP lender for a PPP loan, the application forms, there's really no reason for you to go and seek those out, but they're all there. They're all there, and you're all more than welcome to access them. So local resources, AICPA, I believe that's the Association of International Certified Public Accountants. That's what that acronym stands for, is an incredible resource that talks about everything from calculating your loan forgiveness amount to questions about PPP eligibility. They just do a very, very nice job breaking down all the many different questions that people have about the PPP loan program. And since they were a very active contributor in writing the regulations, then they are certainly an authority on this. And a lot of the times people are wondering about the tax implications, and this is, I can't think of a better source for questions regarding tax implications of the PPP. And to that effect, I want to note that last week we we determined that your PPP loan is not going to be taxed federally. And I was unsure about the state, but I've since gone back and learned that it won't be taxed at the state level either. There's a nuance to that. There's a pending bill that could potentially put a tax on the PPP loan at a state level. That hasn't passed. It's still on the table. So as of now, your PPP loan will not be taxed at a state or at a federal level. Some other resources in addition to AICPA local resources, our office, SCORE, the Oregon SBDC network, and the Women's Business Center. The SCORE, SBDC, and WBC all have advisors on staff that can help you navigate the different COVID-related relief options, but then also work with you on business strategy, accounting, marketing, sales, what have you. They all have qualified advisors there to help you in your small business needs. And we actually have one of our partners on the line.
Welcome, Matt.
Hey, everybody. I'm Matt Rudder with SCORE. I've been a mentor about 1.5 years now. We have a whole collection of about 60 subject matter experts and folks that used to own businesses or at least worked in those businesses. So just in brief, the SBA helps fund us. We're an all-volunteer organization. Any mentorship we do is completely free. The only thing we charge for is workshops and webinars, and those have been reduced because of COVID down to $10 for even like a 2-hour webinar. And I think we're going to actually stick with that model, and later we'll be doing hybrids. We'll be doing in-person seminars mixed with webinars. But just as an example, we had a class last week on the fundamentals of commercial leasing. I've got one tomorrow, social media basics. Another one on Thursday, become a great manager. I'll put a link in the chat on 1, how to request a mentor, and 2, some of the upcoming classes. The third thing I want to mention is that the classes are available in archive now. So you can still pay $10, find anything from the last year, and you'll get the slides, the recording, and a resource to talk to that exact same presenter. You'll get their email. Thank you, everybody.
Awesome. Thanks, Matt. And then some other ways that you guys can stay connected. SBA.gov/updates. That's the best way to stay up to date on all the different changes that are rolling out with the different economic aid programs. As most of you know, there's legislation on the table that could potentially change, make some more amendments to the PPP and other programs. So the best way to stay abreast is to sign up for that SBA e-newsletter so that you are always getting the most current updates from the horse's mouth, so to speak, and that you're informed on all of the changes that may be forthcoming. So you could follow us on Twitter. Our email is pdxhelp@sba.gov. Phone number's there. And like I said, the best way to stay on top of all the most up-to-date information is to go onto sba.gov, specifically /coronavirus relief.